Get another check on Coinbase. Those shares are down about 3% right now after posting results moments ago. The report comes after the company announced earlier today that it is buying crypto options exchange company Deribit. Joining us now before the earnings call is Coinbase CFO Alesia Haas. Alesia, it's great to have you back on Overtime. Thanks for being here. Walk me through what you saw in the quarter, because it looks like it was a miss for transaction revenues and for subscription and services, but monthly transacting users was a beat. So what does that signal about what you're seeing in the crypto space and what that means in terms of engagement and activity on the platform?
Thanks for having me today. Well, what we're seeing today is that we're gaining market share. We're gaining market share in spot and derivative trading. We had over $800 billion in global derivatives trading in the quarter, and our average perps market share increased 60%. We are scaling internationally and really leveraging our international playbook to grow in high growth markets. We did have our second highest MTU quarter ever in Q1, and it looks so much different than it has in the past. For example, our peak in 2021 was all speculative trading, and today we're seeing 80% of our MTUs doing something other than trading. So it really speaks to our revenue diversification. And that ties back to what you said about subscription and services revenue. Subscription and services revenue was up 9% quarter over quarter. We got almost nearly $700 million of subscription and services revenue, our all-time high. And we're seeing growth in stablecoins, growth in Coinbase Q1. So lots of bright spots within our earnings, despite navigating a very choppy market driven by macro trends this quarter.
I want to go back to what you just said about the difference in monthly transacting users between now and 2021 and the fact that back then it was speculative and you're not seeing that now. Does that speak to the maturity of this asset class? Does it speak to the sophistication of the traders and investors that are engaging it now? Or does it speak to the products and what you're offering out to the marketplace?
Great question. I think this speaks to the maturation of the space and the birth of utility in crypto. So when we look at our MTUs, the number of MTUs holding USDC has doubled over the last 2 years. And the average balance of USDC that those MTUs are holding has tripled over the last 2 years. And so we're really seeing stablecoins have product market fit and drive to a new era of crypto utility, as well as we've had staking opportunities to earn yield in crypto. We've introduced a debit card. We've introduced new products and services that we're finding users are engaging in new transaction types. And this is what's driving the mix and the change in behavior within our MTU base.
The Deribit acquisition that was announced, $2.9 billion earlier today, what does that enable? Does that expand you internationally? Is that the way to think about how that fits into the portfolio?
It expands us internationally, but also builds out the product suite of assets that we can trade. So it brings options to the platform. We'll become the largest option trader in crypto. We add this to our spot trading. We add this to our derivatives trading, which is futures and listed futures and perpetual futures. And so it really brings all of this under one roof for our traders. As you mentioned, it will increase our international expansion efforts as the majority of this revenue is non-US and really will add customers that we can then add to our other products and services in the international market. Okay. This is going to be providing us profitable, durable, diversified revenue within the transaction revenue line item.
I'm going to ask you a twofer here. The first is Bitcoin back above 100K. What does it signal? And the second question is, how are you navigating the stablecoin ecosystem, especially given the fact that the Senate failed to advance that stablecoin bill just earlier today?
All right, two great questions. Yep, we saw Bitcoin hit back over 100,000 again. And what we see is investors are approaching this in a different and positive way. The diversification of investors in Bitcoin now, where you see the US setting up a Bitcoin strategic reserve fund, where you see international countries, sovereign entities thinking about holding Bitcoin as a store of value asset. More institutional investors are holding Bitcoin, corporates are holding it on their balance sheet. So it's looking different than it had from a speculative asset in the past. Now it is looking like gold. It is looking like a counter-cyclical asset that we saw in the recent drawdown. It's up over 1,000% over the last 5 years. And we just think this trend of people holding it as a store of value will continue. And you'll see more and more investor types holding Bitcoin in their portfolios. Switching over to stablecoins. Stablecoin legislation and all legislation is a nonlinear journey. So we are making progress. We have bipartisan support to bring stablecoin legislation. It just wasn't today. But we think that this will continue to move forward over the coming days and weeks. And we see the stablecoin market evolving quickly. I mentioned earlier our own users. We can see growth over the last 2 years of the number of users holding USDC, the amount of USDC they're holding. And we saw USDC hit a new all-time high of 60 billion. So these assets have product market fit. We're seeing increasing utility behavior, growth in the overall ecosystem and payments, and I think we'll see that continue.